Last week, we covered chapters 11 and 12, and we discussed the modified endowment contract. This week, chapter 13, and implementing the infinite banking system. This is phase 1. As we cover Nelson Nash's Becoming Your Own Banker book in its entirety, we're covering all of these chapters week by week. We're giving a summary and a little bit of our 2 cents filtered into it. Highly recommend that you pick up the book. It's excellent for understanding this process, and Nash tells a whole bunch of stories inside of it which help to demonstrate the use. The one we're going to cover today is one of the prime examples. This is the Life Insurance Financial Education Podcast, where we're pulling back the curtain on high cash value life insurance and how it can help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
And I'm Carlo Viqueira with NetWealth Finance.
So today in part 3, this is how to start building your own banking system. Chapter 13 is about expanding your system to accommodate all income that comes in.
Yeah, Nelson Nash argues that the ideal goal is for life insurance premiums to eventually equal annual income, as most current income currently flows through someone else's bank. The best way to start building the system is to first target smaller, attainable financing needs like automobiles or your car financing, rather than trying to tackle something huge like a mortgage right away. And he argues that by consistently capitalizing policies and financing cars through them, a person recaptures the interest they would have paid to a finance company instead. The system can then be expanded to self-insure vehicles for comprehensive or collision coverage. And eventually, if you want to, you may choose to pay off your mortgage and use your policy or your infinite banking system to fund various large purchases like that.
Yeah, and this episode introduces the practical application of infinite banking using one of the most manageable expenses out there, your vehicle. Nelson argues that by starting small, you can begin to finance attainable items like cars rather than immediately tackling that mortgage. And then he compares a number of different financing methods across 44 years. He demonstrates whether you're using a lease, a commercial bank, paying cash, using a certificate of deposit, a sinking fund, and then, of course, the infinite banking concept.
Yeah, and I think that's the thing is there's why we have stressed that you should pick up this book is we're not going to dig into every detail of those comparisons. I think it is one of those things that is powerful to actually look at and see in the book. So there's a lot of more detail in that. And I highly recommend checking it out in the book.
Yeah, Nelson is a really good storyteller. And that's really where the power of this book comes in, because through stories, it helps us to understand things easier, to understand concepts and picture ourselves inside those stories. So the power of IBC in the comparison of all those 5 methods, it demonstrates the need for capitalization and building that banking system ahead of time. And the CD and the sinking fund act very similarly to IBC, but the IBC method using whole life insurance does overtake the performance, but it takes a while, about 14 years in the illustration. But the policy owner, by earning both guaranteed interest and dividends, ultimately benefits by using the infinite banking concept in this scenario.
A consistent theme that Nelson Nash goes into throughout this book is paying market rates into your policy. And so sometimes, that should exceed what your interest being charged by the insurance company is. And sometimes that would end up being new premium paid in, or you're paying off the loan and some extra paid up additions. That's a point that he stresses throughout this book. And that in these examples, he really digs into that a bit more when we're talking about financing a vehicle.
And then ultimately, this chapter concludes about expanding the system, where once you can successfully do this for car financing, you expand the system. Maybe you get a second policy for another family car, or you have the ability to continue funding into your current policy. But eventually, you're going to start integrating money previously spent on other things, and allows you to save money even in other areas, like mentioned earlier about auto insurance. I know personally, I've done this where I've increased the deductibles on my collision and comprehensive because I have money set aside. So that allows me to save on the month-to-month expenses of auto insurance, which I think I've never made a claim in 25 plus years. So for me to increase that gets me a savings. You still have to have some coverage, but it's really catastrophic coverage. I'm not one that goes and turns in a claim anytime something happens to my vehicles. I'll just take care of it so that I can keep my auto insurance rates low because something doesn't happen very often to mine. Other people may be in a different scenario, but in this case, it just adds to the savings that we have.
And a lot of people in this space will start to talk about that self-insure concept and expanding what you can end up self-insuring. In these examples, we're talking about cars, but some people will expand that and use their life insurance to be that an emergency fund to cover what might otherwise be through an insurance of some sort. I still personally like to keep various insurance policies that are not related to my life insurance, but a lot of people in this space will tend to talk about that. Once you have a big enough infinite bank, a big enough policy that can fund very large things, it can start to make sense to eliminate what is kind of just a pure expense in some of these other types of insurance.
Now, Chapter 13 was basically utilizing the infinite banking concept for you, the average person. Anybody can use it. Next week, we're going to be back with the implementation phase, part 2, where it's businesses being able to use this thing. And this comes at it from a little bit different angle. There's a lot of good reasons why somebody who owns a business may want to do things with infinite banking rather than outside lenders. So tune in next week. With that, I'm James Barber, your Oregon Cash Flow Pro. You can find me on YouTube at Oregon Cash Flow Pro, and I work with life insurance clients across the country.
And I'm Carlo Viqueira. You can find me at netwealthfinance.com or on YouTube at netwealthfinance, and we'll work with life insurance clients across the country as well.
Take care. See you next week.
Thanks for tuning in.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.